Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do price action analysis unbiasedly. NFP tomorrow, 8:30 a.m. unemployment rate. Got some data, bunch of data stuff coming at 8:30 a.m. And NFP is a big deal. I'm really hoping, guys. Pray with me tonight, guys, that we can finally break out of this chop range, okay? Because I've been eating a lot lately because all this chopping has made me so hungry. I gained about 10 pounds. I'm just kidding. I didn't gain that much weight. But guys, all this chopping, it's gonna end soon. If NFP doesn't end it tomorrow, we got CPI next Thursday, January 12th, okay? Until then, we are going to be continuing to be sheeps, being tactical and trading this level to level, okay? Uncle's gonna help prepare you as always, talking about how I traded it to teach you guys how I approach these choppy markets. And also I'm gonna share you my plan, all right? So let's prepare and hopefully we can practice. Let's go. Okay, so as far as how I trade it goes is the 15-minute chart, and as you guys know, you know my setups. I long breakouts of resistance, short breakdowns of support, and I just play it level to level, okay? And I always update the group, all right? I got first support at 380 and first resistance at 381.5 to 382 zone. Watch for the first breakout and first breakdown. Now, as you guys can see here, it broke down, it opened around 381.7. So above 381.5 and below 382. So 382 was the first resistance. We could have shorted the breakdown of 381.5. And as you can see, in hindsight, it was a very, very nice move. But I personally shorted from 380 breakdown. And where did I take profits? Right at the next support level that I got. I had like around 378.8 to 379. That was based on a triangle pattern. This triangle pattern, okay, level to level. All right, now level to level doesn't always mean $1 moves. It just depends where you have your support and resistance levels, okay? Could be a $1.50 move, could be a $2 move, could be a $5 move, okay? So yeah, that was written right here. 380 loss on the 15-minute chart, put in 378.8 and 378 in play. Obviously 378 did not hit, but it did hit, almost hit 10 cents shy of this target, but took profit around 379, okay? And, level to level is crucial because I wrote here, bulls need 380 recapture for a false breakdown setup. And when we're trading in a choppy market, we're going to get a lot of false moves, false breakdowns, false breakout, weak follow through type of moves, okay? And I'm going to readjust this arrow all the way to over here because after bouncing from the triangle support, it recaptured 380, okay? Told the group, watch, bulls need the 380. So if you was a bull, you should be trading these bullish setups, all right? I need to see 380 or 381.5 recaptured. Look for calls if it does. That was written right there. Alerted to the group. And there it is. Recaptured 380 and gave us a nice level move to the 381.5 to 382 zone where we had a hot stove rejection. And from there, I was pretty much done trading. And I'm glad I was done trading because market just chopped for the rest of the day between that 379 level to the 380 level, okay? Now, you got to talk about the 379 level and the 380 level. Both are very important levels. If I zoom out here, you guys can see the triangle pattern pretty clearly on the 15-minute chart, okay? You can see it on the daily chart. We need to break down 379, guys, to end this chop if you are a bear. Bear case scenario, you got, telling you guys, you need those market makers on your side, and you know you're on your side if they break down that 379 level. And I would favor a multi-day sell-off. I've been saying this all week. My bad if I sound repetitive, but it's good to be consistent with the message and try to drill it into your heads. And hopefully you guys get the message, okay? I'm not trying to hurt nobody, but here we go, guys. As long as 379 holds, most likely I'm gonna favor this triangle pattern continuing to fill out. All right. So hopefully NFP can end this chop tomorrow. I don't care if it's to the upside or to the downside. we gotta see, because it closed around 379. All right, we got a critical level at 380 as well. So you guys know how critical that 379 level. Okay, for that bear case, you're gonna need 379 to fail. All right, now let's talk about the 380 level. Okay, let me go to this weekly chart. Here's a weekly chart that I have here. Okay, I have my Fibonacci level from COVID low to all-time highs. Okay, you can see the 38.2 fib level is at 380. All right, if we zoom in here, you guys can see for the past couple of weeks, we've tested it, washed below it, but no official breakdown of that level on the weekly chart. Even right now, you see that the candle is closed below it on the weekly chart, but you know, it's a weekly chart. We still have tomorrow for some price action. Okay, so if you're a bear, you want to see the SPY close below the 380 level, or continue to close below the 380 level, and close below that 379 level, so we can finally break down of this triangle pattern. Okay, if you are a bull, you want to see that 380 level get recaptured to give us a false breakdown setup. You guys know how I feel about false breakdowns. False breakdowns are very bearish, are very bullish trade setups. Okay, so if 380 recaptured, I'll probably be a little more bullish. All right, look for it to clear 382, 383, and 385, and maybe you can go fill this triangle pattern back up to 386. 386 is now the breakout of the triangle pattern, guys. Okay, 386 could end the chop in favor of the bulls. Okay, but if bull case scenario starts with a recapture of 380, recapture 380, that's a false breakdown setup based on the daily chart. Okay, but keep in mind, based on this weekly chart, below 380 would be very bearish heading into next week. And I do have this falling wedge pattern here that I got. Okay, the resistance level starts from all-time high January 3rd, connects to March 28th high, August 15th high, and November 28th high. Okay, as far as the support of this wedge goes, it starts from May 17th low, connects to June 13th low, and October 10th low. All right, this one May 17th 2021, okay, and this one June 13 on 2022 last year. All right, makes sense, guys? So we're all on the same page. If you guys want, add this falling wedge to your chart as well. Okay, but all I'm saying is, based on his weekly chart, a loss of 380 would be very bearish because we're combining with the Fibonacci level, and I would be targeting, based on the weekly chart, that 200 weekly moving average, which is currently around 366.5-ish, could get tested, guys. Okay, and if that is lost, obviously we can go back down and test the 50% fib level at 349-ish, which was tested way back in October. Okay, so yeah, as far as the very bullish case scenario goes on the weekly chart, you know, we're doing some macro here. Okay, as far as the bullish case scenario on the weekly chart, we got to clear 400 to break out of this falling wedge. Okay, and also the 50 weekly moving average, you can see here we had a false breakout of this back in April of last year, rejection here in August, rejection here in December, back in December, giving us that hot stove rejection. And basically recapturing that, which is around 4.5 right now, would be pretty bullish, and maybe we can end this bear market. But I don't know, that's gonna anger some people if that happens, because a lot of people want it to drop. But as a sheep trader, I wanted to go somewhere, up or down, doesn't matter. All I'm saying is below 380 would be very bearish, and losing a 200 weekly moving average would be very bearish, and maybe we go fill the rest of this fallen wedge. Okay, but like I said, above 400 will be a breakout. Maybe, just maybe, we can end this bearish correction that we had in 2022. All right, that's just some macro analysis. Okay, as far as the daily chart, more closer, shorter term, shorter time frame, whatever. 386 to 379 is the chop range, guys. Anything in between, all noise, all chop. Stay in scalp mode, level to level. catch your 50 cent, whatever. Just do what you gotta do to be green. That's all Uncle Charters cares about, and I hope by giving you guys my levels, it can help. Hopefully. Alright? Triple Q. Well. Broke down that critical level I had at 262.5. Very interesting. Let me tell you something. Market makers love taking out critical support levels the day before big data days. You ever notice that? NFP, I'm assuming is a big deal. Okay? And when they decide to take out a critical support the day before a big data day is released at 8:32. Guys, I'm not trying to be negative here. If you're bearish on a triple Q, I'm going to tell you guys, I've been bearish on a triple Q for quite some time now, and I've been mentioning to stay bearish on triple Q as long as it's below 270. And we finally got the breakdown because you look at this yellow line. We had many tests of that 262.5 level as a support, finding buying pressure, and it finally got a breakdown. Okay? Now, all I'm saying is, as long as triple Q stays below 262.5, I will be bearish with you. This breakdown holds. Hold on to your puts. Swing them. Whatever. But if 262.5 recaptures, guys, that is a bullish recapture. We're going to have a false breakdown setup. So if I can't give you trade ideas to help you make money, I hope I can give you some setups to help you manage your risk. That's all I'm saying. But right now, we got a bearish breakdown. And I've been bull biased since 270, but with loss of 262.5, I'm a little more bull biased, and that would put 260 in play, 259 to 260 in play, and then maybe we go test 254 to 255 zone. Okay, if you're a bull, you need back above 262.5 and especially above 264 and 267. All right. Dow Jones still chopping in that range, okay? It's still chopping in range. So, but one thing I can say is it did close below the 330.8ish level, okay? So it needs to hold that as resistance tomorrow. Take out 328.5ish. It held as support today, but if we can take that out, finally break out this chop and go back and test 325 to 324 zone. All right, if you're a bull, you needed back above 331 and finally clear that 333.6 level, which is when I would swing calls and put in 335.5, 337, and 340-ish in play, okay? Tesla, another overall choppy day on Tesla here, okay? Well, it closed around 110.3-ish, all right? So, resistance I got right now is 112, 113.5, 115, 117, and 120. Like I say, try to long the resistance if it clears. Support right now is at 108.5. It held pretty well today. 107 is support to the 106 zone. 107 to 106 zone with 104.5-ish below that. Okay, so short. When the support fails, play level right now because it looked like Tesla is also in a very choppy mode as well. Okay, so just be careful with that. Apple broke back down below that 126 level. That's a very good sign for bears. Okay, if it breaks down 125, that would put 122.4ish in play and possibly lower targets. Okay, I can't get bullish on I can't get bullish on Apple unless it recaptures 126 and especially 129. All right. Looking at the DXY here, we're getting some reaction. That's a good thing because SPY lost that 380 level. That's a very critical level. And if it wants to lose that 379 level and trigger more downside, definitely going to need the DXY to start getting more bullish here. We got a nice green candle today, okay? I do have some fib channels connected from September 28th high to October 21st high, extended it out all the way down to the December 30th low. And I got some fib channels here, and it broke out of one of the levels at 104.9-ish and back tested another level, resistance level I got at 105.3. That's this blue line here. Tested as support. Now testing as resistance. So if DXY want to continue to be bullish, it needs to hold 104.9 as support, break out 105.3 to trigger more upside up to 106s or higher. If it breaks back below 104.9ish, we got ourselves a false breakout here, and DXY won't be looking so bullish after all. VIX here, we got an inside day candle, okay? Inside day candle. So I'm looking at the mother candle, the previous day that engulfed today's candle. The high is at 23.27 with the low at 21.97. At this point, VIX is consolidating. I need to see it clear 23.27 to favor some upside and break down 21.94 to favor some downside. Okay, but one thing to tell you about the fib level is it's still closed below 22.7. So overall, as of right now, that is bearish. Okay, looking at the option flow, you can see here big money overall is pretty bearish. On SPY as well, buying all these puts, barely getting any calls. One thing that does stick out to me is the sweep order, aggressive, almost $1 million, over 5,000 in size, 365 strike price on these puts. They entered around 379.63 with a 365 strike price. January 20 is the expiration date. Okay, so you see big money. They're putting their money in puts, and it's the same things for QQQ. We're getting some really aggressive orders here. These are in the money puts, but this one right here is a sweep order over 10,000 in size. 230 strike price for February 17th. All right, so these type of orders are starting to come up here, guys, and I think it's worth noting, especially if you're a swing trader, where big money is putting their money at. Tesla, same thing. They're buying a lot of puts, although these are very in the money, very in the money puts here. Okay, and Apple's most likely the same thing. Yeah, 73% in the puts for Apple as well. A lot of in the money puts. Okay, majority puts bearish. And VIX, nothing for VIX. Okay, so thank you guys so much for watching. I hope you guys found value in this video. I try to do a little macro analysis so we can zoom out a little bit and try to see the bigger picture. So I hope you guys like that. And if you guys want more content from Uncle Charters, please consider joining my Discord. So, we can trade this chop together, or we can trade the trend phase together. We can trade it all together. Part of the same community. I would love to serve you guys, and I still do have some coupons available. So definitely take advantage. All right. Thank you guys. Peace.